Welcome to RANsquawk's EU morning briefing for Friday the 19th of June 2009. Just taking a quick look around the markets now. It's just gone 8:30 in London, and pretty much a continuation in fixed income from where we left off yesterday. Obviously we saw quite a raft of positive US data coming up, which did push USTs lower, over a full point in the 10-year at the pick close. And also on the back of that as well, we saw the additional debt that's been announced for the next week of around $104 billion in the US, also weighing on prices there. So again, bunds playing somewhat to catch up, as well as gilt futures on Life Exchange, and they're also trading lower for the time being. In the equity space, it's a pretty similar story as well, just marginally lower following fixed income. But not too much in the way of particular news stories for individual companies. However, it is worth noting for the car makers in Germany, Porsche came out pre-market today with a pretty abysmal statement. They pointed out that they will not reach full year 08 results in this year, and they said they cannot provide a reliable outlook in terms of 2009. Obviously, that's had a knock-on effect, overhang on the likes of VW. They're actually the biggest decliner in the DAX thus far today. That's also dragged down the likes of Daimler and BMW in terms of the sentiment, all within the top 5 declines within the DAX index at the moment. Just taking a look elsewhere then, in terms of actual news flow we have seen come out overnight. Obviously this is Friday, last day of the weekend. As usual, individual stories are pretty light on the ground. But coming out of Asia overnight, we saw the Bank of Japan release their minutes. They said that they should monitor long-term interest rates, as rising government bond issuance could make them more volatile. The board member, or one board member, suggesting the rate review in May was worried about the impact of yields from huge government debt issuances. And elsewhere in China, some comments according to a former central banker saying that China could achieve growth of 8% this year because of strong financial position, huge domestic market and strong external position. Looking elsewhere, something that did come out yesterday evening and did provide somewhat of a lift to the dollar index was news out of the British Bankers Association, which allows, or the BBA may allow, more institutions to take part in daily survey that sets LIBOR, the benchmark for more than $360 trillion of financial products around the world. Again, as mentioned, the dollar index did move around 0.6% at around 6:30 London time yesterday evening on the back of that headline. And European participants just seeing for that for the first time this morning. Elsewhere, across various bodies and agencies as well as individuals, very much the tone at the moment is seeing further stabilisation in terms of the economy. Out of the US, Treasury Secretary Geithner said the US economy is showing some signs of stability. We've seen that echoed as well from ECB member Bini Smaghi this morning. And also out of the EU draft document, which is looking to be approved later today, they suggest the EU is on course for a sustained economic recovery and must be prepared to rein in budget deficits after region emerges from recessions, or individual regions emerge from their individual recessions. Elsewhere, the dollar index at the moment is slightly lower, just around 0.1%. That is helping buoy WTI crude prices, currently trading just shy of the 72 handle at the moment. One thing just to note out of the UK markets, Bank of England's King is being covered in the South Daily Echo interview. King pointed out it's not very visible to expect activity to pick up as quickly as a fall in recession. However, we are seeing some signs that the pace of decline in the economy is levelling off. However, King did stress it is too early to draw strong conclusions from any recent data. So the Bank of England's governor there being slightly more cautious than, say, his ECB and US Treasury counterparts. Looking ahead then for the schedule today, there isn't any major data from the US, so very much going to be a sentiment-driven day, obviously given the various regulation changes we've seen from Obama announced earlier in the week. I would imagine that would again be one of the focuses today.
And just looking ahead on the calendar, 9:30 from the UK will be eyeing the UK retail sales reports, and then this afternoon eyes will be on jobs data. Continuing claims expected to remain pretty much steady. Initial jobless expected to remain pretty much steady. An expectation of 602,000. However, continuing claims are expected to continue to rise to 6.84 million today. And then the next attention will turn to the Philly Fed survey, where analysts are yet again expecting a slight improvement.